Thank you for joining me. I'm Juan, lead trader and founder of Prosperity Trade. In this video, I'm going to talk about Matterport. It's currently trading 50 times the revised full year new guidance, despite only growing 13.9% over the last 5 quarters during one of the hottest real estate markets ever. So is this a good investment or is it overvalued? You're going to want to watch this video. What exactly is Matterport? What they describe themselves as the leading spatial data company focused on digitizing and indexing the built world. Our all-in-one 3D data platform enables anyone to turn a space into an accurate and immersive digital twin, which can be used to design, build, operate, promote, and understand any space. So they have a technology, can work with contractors, can work with real estate agents. It's just really diverse on where it can be used. And these are some of the companies are in business with Matterport. Their customers from startups to the world's largest company, thousands of businesses in 150 countries. And they claim also that using their device increases the chances of home sales. So there's a lot of positive things to look at for this company. Going over some of their technology here, for example, let's say you're a contractor. You can kind of have a meeting and discuss certain areas. It's real easy to use, and you can just kind of go through your area of construction, give whatever assignments you want, and kind of just very easy to navigate. And the quality is very high quality. It's not like before where nothing was clear. I mean, every single detail is around here. And for the contractor setting it up, they can set it up by using their phone, or they can use the Matterport camera. So it's just extremely diverse in usage. So some of the products that you can use to record, like I said, the phone, these are their devices. And they compare the two. And for example, if you use the Matterport Pro 2, the imagery is excellent compared to mobile camera, good to very good. All of them have VR, all of them have floor plans, all of them have iOS capture and Android capture, except for this device here. So I think for real estate, especially with COVID, people not wanting to interact as much, I think it's extremely useful. I mean, I wouldn't close a home just based off of camera, but you can definitely eliminate a bunch of houses that you wouldn't want to move into. And this is one of the real estate statistics that they have. 74% of agents using Matterport win more listings. 95% of people are more likely to call about properties with 3D virtual tours. So if you're a busy person and you want to narrow down a few apartments or whatever, you can get a good tour, get a good glance, easy to navigate. You can go into the bathroom here. I mean, it's really, you get to see everything and probably just like narrow down. And you see here, see the camera, narrow down to just a few apartments that you're happy with. And the same thing you can do with homes. You can just tour the whole home. And if you were going to see in the past maybe 10 different houses or whatever, you can probably narrow this down just to a few houses and most likely close. It's extremely easy to use and it's super clear. So here we just toured basically the whole apartment. You can see every feature of the house. So I mean, I really like this technology. I think it's going to be around for a while. I guess the question is it overvalued right now? And, you know, some people may argue that, okay, it's trading higher than it's supposed to. The PE is high, but we're paying for future growth. I can understand that argument, but I think that it needs to prove itself. I think that it's due for possibly going to pull back, especially the way the market's going. And I don't want to overpay. I mean, right now it's trading at $23. So if you buy, you know, 2, 3, 4, 5,000 shares, you know, you're potentially investing a couple $100,000 into this company, and you want to make sure that you're getting in at the best point. I mean, if you don't really care, if you already know the business and you're 100% confident that in the next 3 years, they're going to be the leaders and that they're not going to have much competition in this space, and you're that bullish, then, you know, this really wouldn't apply to you. For me, I like the technology. I think that they're going to be leaders in this industry. I just don't want to overpay for it right now. In their investor relation, they talk about 108% year-over-year growth. There's been a little bit of a slowdown. Android launches expanded our reach to 85% of the world. So now they're used by Android. Their subscribers grew from 52,000 to 330,000. They have potential of being in 150 countries. They can be used in corporate, industrial, commercial, retail, real estate, travel. So they've currently penetrated about 1% of the market, and they anticipate that they'll penetrate 5%, which will make them penetrate 5%. Their total addressable market is 240 billion. So they have a lot of potential. But I also see, I think they're ahead of the game. They're way ahead of anybody else. They have $240 billion total addressable market. I think that in the future, more competitors are going to come. So again, they've shown their quarterly growth and their highlights. Massive, unpenetrated, $240 billion total addressable market. They are the market leaders fueling the digital transformation of the built world. I agree with that. They are definitely in a league of their own right now. Unrivaled software and data platform with significant expansion opportunities. Global blue chip customers spanning diverse and end markets, rapid growth. So they do. All these points are valid. Even though this is their own presentations, they're only going to say positive things about themselves. But I agree with everything that they mention here. It's kind of with an analyst, they're kind of mixed. Some are saying it's overvalued. They're bullish because the technology, it's worth paying for it. The potential is, it's worth paying for the potential of this company. It's been on an uptrend. It's went as high as $38 down to 24. I would like to see it go back to 15 if I was going to take a position in this. But we're going to go over our DCF. So again, quarterly revenue, they went from 12 million to 24 million, 25 million, 26, 29. So they're growing. They're obviously, these are small numbers right now, but they have a lot of potential. Really, the ultimate question is, it's obvious they're overvalued compared to what their revenue is. And you can't do a free cash flow DCF. So you just have to ask yourself, do you know enough about the industry? Do they have a potential moat, or can anyone produce this technology? Or if someone can produce this technology, how far are they from actually being able to be competitive with Matterport? If you think that they're already too far ahead from everyone else and you feel like it's worth the investment, then you have to make that decision on your own. For me, I do like the company. I do like the technology. I do see the usage for it. I think they're going to make a big difference, and I think they're going to spread. I just don't want to pay $23 a share right now. I'd rather pay a lot less. Again, so this is a presentation here. This is the total addressable market that they have in their presentation. This is where they can be used. Some customers for real estate, Redfin, Century 21. And so this is everyone that they're contracted, even some public business, public sector business. Some customers here, insurance carriers, property managers. Why they use it? Because they say it's 3 to 4 times more productivity, improvement for estimators, delivery measurements, data accuracy within 1%. Equipment here, three times increases field productivity, 50% reduction in travel cost, platform level integration that enhances every KW listing, whether through MLS or kw.com, best in class listing experience for agents to generate needle moving digital interaction. So there's a lot of positive feedback from the consumers. So I think they're getting business and they're keeping business. It's just a matter of how quickly will they start growing. They are becoming pretty popular, and we have Chase, Morgan, Vanguard, Senator Investment Group, BlackRock, a lot of companies that are invested in them pretty early, assuming that they're going to continue to have investors pouring in money into their technology as they grow. People are kind of waiting probably a few more quarters, maybe a year or two, to see if they can keep the pace that they're currently growing at and keep growing their revenue. I anticipate that there's going to be a lot more institutional investors investing in this company. So some of the ratings we have here, they average between 34, 30, 25, 20, 20. So the highest is 35. The lowest is the 20. Averaged about $25 per share for estimates. And the price right now is $22.09. Matterport primarily targets commercial and residential real estate areas where Matterport software is used to produce virtual walkthroughs at offices and homes. It can be used with their smartphones, Apples. I think the only bear case I have for them is the possibility of new competitors and technology disrupting the 3D market. Although I do think they're ahead of anyone else right now. Real estate customer behavior changes post-pandemic. Sequential subscriber growth has shown the same acceleration as year-over-year subs. Supply chain disruption for products and services. So these are some of the risks right now. For me, the only thing is I just want the price to be a little less right now. So the DCF here is not like the DCF that I had before, the free cash flow DCF. This one's more kind of revenue growth, what I anticipate. So we'll have three cases: the downside, which shows 25%, 45%, 60%, upside, which 30%, 50, and and upside 35, 55, 70, all the way out about 10 years. So these are all the years, all the way down to 31. Pretty aggressive numbers, but if you're bullish, right now, I mean, the revenue that they have is not a whole lot. So I think there's pretty good chance that they can get exponential growth. These are numbers that we can manipulate and anticipate. We have our downside thesis, our base thesis, and upside thesis. Then we put in the cost of revenue, labor, R&D, everything else from the income tax and the balance sheet statements. And then we take the DCF. So we have the current stock price at $25.51. I think they're going to do better than the base case. It would show that their value over the next few years would make them a $22 a share company. You take the upside numbers, there's a 71% chance of growth, and we'll show the downside risk. So if they don't grow quickly at all, if they start to lose business, it can be worth $12.39. I do think that eventually they will get some of that upside revenue that's here. It's not too far-fetched for their revenue to grow by 35%, then 55%, 70%, 40%. I think that I want to wait, just see them, how they do over the next few years, over maybe a year, over the next few quarters, see what kind of growth that they have. There's a lot of potential for this company. To me, it's just I'm not going to invest in it yet, because you're talking about putting anywhere from $50,000 to $100,000 in this company, or more, or whatever size you invest in. Me personally, I want to be sure that I'm getting in at the best price right now, and I want to give this company a chance to prove themselves. Unless they drop down back to the lows up here, or 17 or something like that, then I think it'll be too hard to pass up at that point. So I'm putting this ticker MTTR in my bearish folder for now. I don't have much negative to say about this company. I do think it's a great company. I think that the technology has a lot of potential to be around for a long time. I just don't want to pay the price what it's going for now. These stocks falling to those prices that you have are very realistic. If we pull up just what the market's done the last few days, we pull up PayPal, for example. PayPal was trading at 309. Now all the way down to 179. Imagine the person that was thinking about buying it up here. Roku trading at 488 down to 205. So these companies, they spike up and they drop. And I mean, even Amazon a long time ago was trading at when it was trading at 100 and something, it dropped all the way to $8 before, look at Amazon, the way it's trading now. I mean, do you have the stomach to watch your portfolio drop 100 points? I like the ticker. I want to see it below 17. I want to wait a few quarters to see if their revenue growth continues or if it's going to slow down. Right now, it's slowing down a little bit. It only grew about 13.9% over 5 quarters. I don't like to see that type of growth, especially right now. The market is so hot. The real estate market has been on fire. So I would have expected higher growth than that. So I want to wait another 5 quarters to see what kind of growth they have, or wait to see if the price drops below 17 before I start investing in it. That was my video. Thank you for watching. Please subscribe, comment, and like, and see you on the next video.